market review quick. See what's going on for the morning. GLYC up 34%, trading 718. ETRM up 11%, trading 466. SNDX up 8%, 1476. And oil, anybody that was in the midday review yesterday will know that it was up in this area here in this target, and we had identified this as resistance, and sure enough it ran along it. And then overnight we sent out a notice to the Epic subscribers that this was gonna change fast, and sure enough, kaboom, and it came down to the bottom of the quadrant there, and now it's bouncing a bit. Main support isn't far below. There it is there. So that channel is definitely confirmed. What else is going on out there? A little bit of chaos yesterday in the markets. By the way, my apologies about yesterday afternoon and the day before. Both days I ran into major amounts of work in the afternoon on the business side. That's becoming more and more all the time. Yeah, the scanners aren't that busy right now. What time is it? 9:13, so I don't know if we'll have anything else get any momentum before open here. Chris Cornell, that's really too bad. Almost the same age as me. Well, we'll see how the markets react today. Chris Cornell, so they're saying he might have committed suicide. Wow. Jeez. S&P moving its way through the fibs clean. I guess we'll see how it handles open here. That's too bad. Chris Cornell, suicide. Okay, what else is on the scanners here? Nothing else. Yeah, there is absolutely nothing else on these scanners. I think this is the quietest I've seen the scanners in 2017 period. It's going to be an interesting day. So the VIX actually lives. So there's the Bollinger Bands for VIX. Anytime it gets up over top of the upper Bollinger Bands, it's almost a guaranteed short. And it's just up over the upper right now. Just. But the risk reward on that short is really decent. This will be interesting to see if the S&P gets moving or not. So GLYC has got some movement here right before open, 10 minutes before open. It's got its VWAP, it's got all the MAs set properly here. How's its year daily, I guess. So it's got resistance. It came right up against it right there at, oh no, it's way above its 200 right now. It's going to be sitting up here somewhere when it opens. Yeah, so resistance is right around 750. This GLYC. It actually looks pretty decent. So it's pre-market high. 765 area. So it got up into that resistance. ETRM low floater, 13%. This one, it doesn't really matter where resistance is. It's just a price action play period all the time. It either goes or it doesn't. So it's getting up to its pre-market high right now. SNDX. Those three are pretty bullish. S&P's not much off this morning. And VIX is just above its Bollinger Band. So it'll be interesting to see. There's some opportunity here for sure. With volatility that high. If the S&P gets going and volatility comes off, I'll be in XIV for sure. So Walmart's beat. Markets needed that. Six minutes to open. Looks like they're going to bring GLYC right up to pre-market high right at the open here. So here comes the test on the pre-market high right now, 3 minutes before open. GLYC, very bullish. That sure looks like the play. Squeeze momentum indicator just turned green too. So ETRM over $5 I'll look at. GLYC, I'm not sure about that 750 mark. Should be careful with that 50% too. But ETRM over $5 for sure. So we're a minute away. CYTR I don't like the idea of, but we'll see what kind of price action it gets. SNDX I'd look at over 15. Wow, this is strong. Really, really strong. That's pretty awesome action. Okay, here comes open. Trading 775 at the open. 783. It's at 45%. So you want to be careful with that 50%. So I'm looking for $8 or over. So it's at the 775 resistance right now. You want to watch the quarters, 775, and then the 50%. ETRM 494, so it's coming up on $5. So over $5, I'll definitely take a close look at it. Oh, that spread is huge. Dangerous. Here's $8, and I'm in at 809, 3,000 shares, real tight. I'm just going to bring it down on the 1 and see how it reacts here. Struggling with that 825. So this is the 1 minute chart. Coming up an 850, and it's gonna maybe hold it. Nope, it's not. So my stop's at 810, my entry's at 809. Trading 834, 54%, so it's back over that 50%. 826, 830. It just hit 810 there, and I'm not seeing it. Yeah, I got stopped. I was gonna say I didn't see my fill. So now I'm just watching this stock RSI right here. It's coming down, right? So I think what I'll have to do, it's good I got stopped there, is wait for that stock RSI to come down to the bottom. UITR is coming out of the bowl there and failing. How's oil doing? Right up against the side of a quadrant wall. We're getting close anyway. Pardon me. S&P is up against the underside of a fib, so it's testing. Volatility. So it's sitting just up over that Bollinger Band and that 200 MA. Wow, that really came off. So GLYC is sitting on its 21 in EMA, the green line. What a washout. Okay, so here comes ETRM on its second round of momentum. Right now I kind of like this. So 498. I got lots of room to 50%. Is that $5? Bottom of that candle is at 490. I'm long at 502. I'll keep this really tight. So I just set my stop at 502. Oh, it didn't. I don't see a fill. No, there's no fill. Why am I not getting filled? Oh yeah, I got filled. Damn, so there's no follow through. Shoot. back at VWAP. GLYC. Absolutely zero follow through with these. This isn't so bad, it just came back to VWAP. I could have gave it more room, I guess, but earnings are going to be interesting now. Okay, so this is, I like the action. I was just playing it tight because of the nature of the markets right now, or the condition of the market. There's 2 minutes left on this candle. I don't like the spread though. That's the only problem. Salesforce earnings are coming up too, eh? And John Deere. I think John Deere is going to miss. Wow, yeah, decent action. So we'll see if this, once it gets down to 1 minute, if the pressure comes or not. If it doesn't come, I might go long. There's a number of people DMing me this morning. When I'm playing the momentums in the morning, it's really tough to read DMs and respond and stuff, just as a quick heads up. Fair bit going on. Okay, so we're getting into 45 seconds. So the secret here is whether or not there's going to be pressure or not. If there's no pressure on it, I might take it long. Trading $5 with 10 cents left, so it's 10 cents, 10 seconds. So there's a bit of pressure there. It's down at the bottom of the candle, but it's not real intense. So we're on to the new candle here. So it held VWAP. So it's not bad action. It's not fantastic either though. The S&P is up over that resistance. It's getting into 100-day resistance. Oil's getting back up into a resistance zone here soon. It's at a resistance right now, but a light one, that light gray line. These orange ones though are a little more intense. It might end up in this target here on Friday. Yeah, CYTR, not enough bull juice there to get up through the bowl. Didn't think it would. SNDX is having the same situation. ETRM, look at this. 3 minutes left on the candle. Very interesting. Interesting. I've made a lot of money off the stock over the years. When it gets going, man, it's hard to stop it. And 45 seconds left. It's got to breach the top of that previous candle. It's just touching the top of it right now. It's pretty bullish though. MACD's trending up. There it goes. So trading the quarters, looking for 526 with volume. So this is on the 1 minute, so volume's coming in right now. MACD, stock RSI, and squeeze momentum's up, and volume's up. Interesting. It's too bad it didn't take off there over 525. Huh, pretty risky stuff. All of it. Hey Corey, did you get an email from me this morning with the room link? I just had a couple people DM and say they didn't get it. Weird. Yeah, it came off. No follow through. Too bad. Okay, so oil's up against resistance. Not the primary resistance, but some resistance. S&P's up against its resistance. It's got the 3 coming up under its 50 there. So if it works its way through these MAs on the 3, I'll probably take a long on XIV. Yeah, these morning momentums, that's just not good. Morning, Trader Girl. You didn't get an email from me this morning? I sent one out. It's very odd. Sent items. was titled pre-market. It was, I'll have to check that out and see why that happened later on. Well, SNDX I don't think it's going to do a lot either. CYTR came out of the bowl and into a bit of a cup maybe. Oil is getting right into resistance now. These two orange lines, that one there and this one here. So for those that just joined us in the room yesterday, we had explained that there was a resistance up in here. So in the lunch hour review, that's where oil was trading, and then it's come down in this channel here, and then overnight we sent a message to our epic traders right before this crash to be ready for it, and it happened a half an hour later. Then after it got its downdraft, came down, touched the bottom of that algo wall, the quadrant, and then bounced, and now it's getting up against another algo line there, that orange one, which isn't really significant. It's the thicker one that's significant, and this Fibonacci line here, the green one. So it's getting up into the apex of this quadrant, and things can happen when they're in the apex. So we'll see. Targets for Friday, there's one up top and there's one here. So volatility is coming right down into its upper Bollinger there, and on the 200 MA. So it's come off. That's a super predictable trade up over its upper Bollinger, shorting it. Here we go with the S&P. So the 20 is getting up under the 50 there. So it might pop here. That's a 100-day it's fighting with. No, this is on the 3-minute. Pretty tight trading. And your 200's up here. So I think what I'll do is I'll bring up XIV. The targets, how they work is we just the targets are really tough. So actually I watched that video from yesterday, and it's actually good that I explained that the targets are like the least important thing to the algorithm. The targets are more for fun than anything else. The money's made with the channels and the support and resistance levels and stuff. But anyway, all they are is possible intersections of time and price, and there's 2 provided for each. So 2 on Tuesday, 2 on Wednesday, and 2 on Friday. So it becomes a matter of take your pick. That's really all it is. Quite often they hit both. Like, you see how it went into the target there, it didn't quite hit the center, and then boom in the center of this one. Not quite in the target there, or just got into it, and then boom in the second center of the next one. So that's kind of the typical action. The money though is made at the wide support and resistance, trading that or in the channels, because these channels, well, the support and resistance epic knows the support and resistance more than, it's just crazy how predictable it is, and then these channels are too. So if you were trading this channel right now, this is the upside of the channel where it was just trading in, so you know, you'd short oil in here, and the bottom of the channel's way down here. The results on trading the algorithm as it's designed, they're coming out soon, and they're just astronomical, like over 1200% a year. Right here is a well, it's a support really on the downside of the channel, so it's whether or not this holds, but it's also a possible channel up. So that's really how it works. Then you got the quadrants where it hit right there, hit a quadrant. But yeah, any questions you might, if anybody in the room has questions about it, watch that video from yesterday. It kind of explains it all. And then anything that doesn't explain, go ahead and just fire away questions anytime. Send me a DM or email. Okay, volatility. I was going to short it, but I thought, okay, so the 20 is getting up to the 50 on the S&P, so I want to watch that close. It's up against resistance. So I want to see if we get the turn here. Yeah, no problem, Trader Girl. No problem at all. It's my job to explain it. But I'll tell you right now, the money's made with this algorithm in the wide support and resistance. So if anybody's wondering, you just watch the video from yesterday. It explains where the support and resistance is, the main support and resistance, and then also on the channels, and then intraday on the quadrants, and then the targets are just kind of a fun extra, but they do work. But it's an extra because it's not as scientific, right? Like you gotta, it's kind of hard to explain, but the other three indicators, the wide support and resistance, the channels, and the quadrants, and all three of those, the algorithm knows where they are in advance of trade, getting there. So when the turn comes, our traders know, okay, you know, the turn's coming, first of all, and second of all, when the turn comes, here's where the channel's going to be, and here's where the main support and resistance is. So then the trader can plan in advance their trading plan, and that's why it's so successful. Much different than conventional charting, right? Conventional charting tells you what happened. This tells you what's going to happen based on decisions. So the price action isn't great here on the S&P with the 20 coming up through the 50, but we'll see. It might take a few days for that chart to repair. There's a lot of bears saying it's just gonna pull way back, but I don't know. Yeah, so oil hit that quadrant wall there and came off. I was thinking of shorting it there, but there's a decision, right? That's the problem, right below here. So I'd kind of like for this to play out. So it's either going to continue down in its channel, or it's going to start up in this channel that's identified here. So there's an uptrending channel. When you see these thin lines right here, this is identifying the width of the channel. It's already telling you in advance, and the arrows tell you which direction the channel's going in. So there's a channel there. So it's like an intersection, right? You just think, oh, you know, is it going to take the turn? See that arrow there, that arrow there. That's an upward channel. So it's whether or not trade chooses that. And then there's a downtrending channel. And the downtrending channel is right here, from there to there, right? You see that, those two lines going back and forth? That identifies the width of the channel. Now, why am I not assuming it'll go down that channel? Because there's an intersection right here. So this thick orange line says that's a decision. It's telling me as a trader there's an intersection. So it's either going to go up or it's going to go down. So this line right here is my real, well, this one and this one. It gets up over this one and starts in this channel. I know it's going up channel. Gets through this one down here. I know it's going down channel. That's the problem. So this zone right here is decision zone for oil. As it gets closer into this area, it's going to make a decision up or down, up channel or down channel. So it's kind of a screwy day for oil until it decides. Okay, so here's the pop on S&P I was waiting for. The 20's through the 50 now. Just touched the 100. So when it worked its way up over the 50, it came back and tested the 50. Now it's riding the 20. So yeah. Pretty good volume coming in now. Huge volume coming in now. Seconds left in the candle. Massive volume. I'm long XIV. Sorry about that, I was on the phone there. So I took an entry because I thought, well, yeah, and it corresponds to. So 69.34, 69.34 at 450. Dan, uh, that's a good question. I'll have to dig into the answer for you there. We're using, like, the algorithm that the traders use. The time frame is 30 minutes, 30-minute chart. The short answer is yes, we do use it. Epic has 50 indicators actually. So the indicators that you're seeing on the chart are not the indicators that charted it. So we use 50 indicators, 10 time frames, 60 months back. And then we run the math on all that. So that's 10 time frames, 50 indicators, 60 months back. We mash the math on it and we remove the anomalies from the math, and that's how you end up with this represented chart. So the indicators that you're seeing on this chart are not, these are custom indicators, right? This is the mashup. So you don't see the MAs, you don't see the stochastic RSI, you don't see GAN, you don't see any of them of the 50 that we use. Well, I guess you see the fibs. That's not necessarily true because, yeah, you see the support and resistance of Fibonacci. So there you go. It's getting up into that resistance zone right now. But yeah, you could certainly take the Epic chart and add whatever you want to it. Just go into TradingView, hit share, and make it yours. And away you go. Wow, DMs are just going nuts today. This should be interesting. Yeah, I'm playing XIV just thinking, well, volatility, it should come off a bit. And the S&P should, there's probably half decent risk reward there. And really, besides my swing trades, there's really, like on the day trade side, there's not much happening. Oh yeah, sure, all the indicators would help. It's just we don't put them, like for us, we don't need them because we trade the algorithm with great success. But indicators are good for sure, and it's whatever one you're comfortable with. I didn't know how to say that right. We use 50 indicators to get here, so like we love them. But the chart, yeah, you could add them in there for yourself for sure. We're trying to take things out of the chart because our traders are, our members are constantly telling us the chart's too busy. They want less indicators, which, for a guy like me, it's like, throw them all in there. I don't care. Yeah. Soon our trading rooms are going to have chart sharing, like with our members, they'll be able to share charts and get on the mic and stuff like that. Of course, moderated, but so yeah, that's something that you could always share with the group too. The 24-hour oil room would be really good for stuff like that. Really good. Our day trading room is more kind of general, but I'm pretty pumped about that oil trading room. I'm not getting a serious pop there, but we'll see what happens. I gotta look at these scanners really quick and see what's going on with our scans. I find myself quite often, by the way, when I'm trading oil, that I'll add, oh look at that, it's right up there now, right at the resistance. Did something come out on the news? That's pretty aggressive. Anyway, I find myself adding indicators myself, you know, not showing them on my own charting on my other monitors, because I'm just an indicator freak, right? I'm a nerd. It's the way I trade. But yeah, wow, that's aggressive. I'm gonna check the news wires here quick. Like going into resistance like that, that's aggressive. It's supposed to calm down when it gets into the resistance, not get aggressive. So what's going on out there that's causing that to happen? Is it the red to green? Is it proxies? There's a lot of proxies that trade oil. The Fed is pretty sneaky. I've learned a lot more about that kind of stuff lately from our friends. That like Epic? Wow, that's super aggressive trade right at a resistance point. I would say that's either news or a significant proxy at work there. Cushing revision. Really? Thanks, Matt. Interesting. That was pretty aggressive trade there. Proxies, what do I mean by proxies? The federal, well, the global bankers, they have proxies that trade oil for them. Kind of got to dig deep and go down the rabbit hole and do some research to learn about it, but it's there for you. It's a mechanism for markets, so any lever that they can get on the markets, they've got proxies for. And oil's a big lever, but it looks like this is more Cushing change. Wow, did it ever get into that resistance hard? Like normally what it'll do is when it gets into the resistance on those algo walls, it'll calm right down, like it did yesterday, right, during the webinar. Like once it got up in that resistance, it's kind of dead action. I mean, the candles are fairly big, but the action was dead. It was really slow. Volume did come up, but it wasn't as assertive as that. Like that was ferocious, the way it banged into that wall. Normally when it does that, it gets through. So it might go after this target up here, but don't forget, it typically hits both targets. Like if it goes after one target, it did, like it did here, right? It went after the target and then dropped into the second one, went after this target and spiked into the second one, and that's very common. So if it goes after this target, it would be very common for it to go after it and then drop into the second one. And the other thing too is Friday targets are very unpredictable. Whoops, I just wrecked my target. I think I moved the time. Yep. What time did I put it at? 11 o'clock in the morning? No. it hit the algo wall there and came off. But I would suggest with how aggressive it hit it, that I'd be cautious because it might get through. Just resetting these targets really quick. There, I think that's pretty much dead center. So yeah, see how it hit it so perfect and came off? Like perfect. Now where's it trading? It's trading right on that fib support. So yeah, it's decision day for oil. You know what? I don't know why. So that's the thing, right? Like none of it we don't like none of it we know why. The whole thing we don't know why. All we know is that when we ran the math, um, two probable targets came out for almost every time cycle. Now sometimes, like when there's holidays, like there's a holiday coming up in the States right at the end of the month. Holiday weeks mess it up. Like we had one week there where there was I think 22 targets or something, and the machines actually went after every single target that week and nailed almost. I think it was 22 or 26. It was early in the year, and so like most weeks you'll have six targets, right? That week I think it might have been 26 targets, and it almost hit all of them. And the math to like pardon me, the math to map that out was crazy. I remember that week because we were working. It took us six times as long to run the math. So I distinctly remember it being frustrated, going like when we were running the math, going, "Holy crap! There's 9 now. No, there's 10. No, there's 11." And then it was like, I think it was 26 that week. And then sure enough, like by the end of the week, it had nailed almost every one of them. Some days it would nail 4 or 5 or more, actually 6 or 7. So yeah, we don't know why they're there. We know why the ones on the holiday weeks are why there's more. It's because the different algorithm developers, the people coding the algorithms around the world for the different firms, they don't all talk to each other to get into agreement. So this group of scientists and software developers will do it this way, and then this group will do it that way, and they're using two different groups of logic, and that's why in the holidays you get confusion. But in a normal week you don't have confusion. The targets are really clear. The math comes out super clear, so everybody's in agreement without talking, I guess is the best way to explain it. And I would assume that the reason the targets are there is so that when they were programming their algorithms, that their traders in house, like in the dark pools and stuff, had the targets for every week. So it's a rule based system. Like it's all logical. It's absolute logic, really. But anyway, holiday weeks screw it up. But yeah, so you can see how it hit that wall there, came off, and now it's trading just under that fib. This orange line here, by the way, is the mid line to that channel, right? The upper is right up here, the lower is down here, and the mid's here. Oh, I forgot to alert this. Shoot. People are gonna lose it on me. I get beat up for not getting my alerts out, I gotta admit. People get pretty mad at me for that. Oh, shoot. Now I'm like hoping my trade comes off so that I can alert it back. Oh no. Darn it. Oh well, I'll later late alert it right now. What can you do? Sorry. Hardly wait until we have lots of staff. Sartaj isn't sleeping. I'm not sleeping. Our two helpers aren't sleeping. Alerts. Oh, they're gonna be bad. Okie dokie, alert's gone. What are the scanners doing? Anything going on here? What's oil doing? Did it get up through there yet? Huh. Man, that just banged into that wall hard. The velocity of trade is very important. If you see it kind of creep into resistance, it's not going to make it. But if it bangs into resistance like that, oil can be really, really vicious. Okay. Swing trade alerts. No. This is a day trade. Wow. I know somebody that needs a personal assistant. Scanners. What's the scanners doing? We haven't got very many people on the Twitter alert service. People like email, hey, for alerts. Interesting. There, it's coming off a bit. Jam job. Yeah, so Coleman, the harder oil hits a resistance, the more chance it's getting through. So that's really important. Like the more vicious it hits into it. Like I thought for sure it was going right through. Like it really slammed in there. But it didn't. But it probably will, just based on the velocity of trade and nothing else. See, it's coming back for another run now. It doesn't have the same velocity, but it's coming back for seconds here, which is much different than yesterday. Yesterday it was really, it was different. Velocity was different. So if there's an indicator that would be cool to add to Epic, it would be the velocity part, because it's a huge huge indicator of probability of resistance and support breaking. See, there it goes, it's through. And now it's going to get really aggressive. Once it gets through, it'll get aggressive, and this green Fibonacci support and resistance line here, the horizontal, that'll be the next test. Oh, look, it came back off. Typically, once it's through resistance, it gets really aggressive. Look at the size of that candle. That's a pretty big candle. The battle is definitely on. See, the problem is the big operations, the big dark pools, the big trading houses. Like, we've got some trading houses that use Epic, for example, and they, like, once they get into, and it's smart, right? Once you get into resistance, they back off. So these are, you know, these are random groups that are trying to trade this right now. The big money, you know, trades off of, like, the big money would have hit it right here. That's why you get the big candle, because that gray line right there is a quadrant, right? That's support. Boom. So once you get to know where these boxes are, these diamond shaped boxes, see, it was in this quadrant here. So this quadrant, the outside of this intraday quadrant right here, it was in the quadrant, came up, and look what happened right when it got to the outside of the quadrant wall. Boom. So its next quadrant, if it stays up in here, is right here. So this line here, this line here, this line here, and this line here make up the next quadrant on the 30-minute. But it's got to stay up there, and it's got to confirm. And once it stays up and it confirms, you'll see the machines and you know, the big trading houses hit it really hard, and then it'll come up and test one of these two quadrant walls here. And keep in mind, on the model, the thicker the line, the more important it is. So that works with the targets too, right? So you've got probability on targets. So you see this is much thicker line than this one. So this upper target is the main probability target. For, see the spike? That's what happens. So it just confirmed. Now the machines are in. That vicious trading, that's when you know those machines are in. Now it'll trade really predictable. It'll trade through this quadrant, or it'll crash really hard, one of the two, but it's in the quadrant now, so it should trade in. But anyway, you see these targets. So this one here is darker than this one. Same thing here. This was darker than this one. Actually, the secondary target hit perfect. The primary target didn't hit perfect. On Tuesday, the primary target hit perfect, and the secondary didn't hit perfect. But the targets, like, we considered taking the targets right out of there because they're kind of distracting. Because it's really these quadrants, the main support, resistance areas, and the channels, right? That's where the money is. That's where the money's made. So if it stays up in this range, you know what it's doing then, right? It's changing. It's the change. It's the turn, right? Because now it's outside of that downward trending channel, and it's actually entering into an upward trending channel. So I'm just going to bring the runway a little more on the screen here for you, because this is the upper wall of that downward trending channel. It's getting up out of it. If it maintains, stays up over this orange line, it's now in this new runway. And so that's why it's drawn on this. It's not by accident, it's there, right? It's there because it's a clear decision for oil to keep going down or go up into this new channel. And there ain't no conventional chart that has that channel there a week in advance that says, oh, guess what? Anyway, that's how you read what's going on. Yeah, so volatility's come off the 200 now. It's under its Bollinger Band. S&P's got its little pop I was looking for. The 20's through the 100 now. It got through the 50 and the 100. Now it's testing its 200. So this is on the 3, of course. Very tight trading, but how's the XIV doing? Yeah, it's not doing fantastic yet, but the S&P confirms here. Price stays above that 200 with the 20 through that 200 and price above it. It's testing a fib right now, that green line. What's oil doing? See, that's the other thing too. If oil gets going up into this new channel, then you know that, well, that helps the markets, right? Everybody knows that. So how do I know it's not going to pin bar? Well, the best way to know how I know what I know is to look back and do your research on our calls and tell me that we don't know. That's the best way as far as our calls on oil. Do your reading. That'll tell you. Like, as far as oil's concerned, I hate to be arrogant about oil, but the reality is, you know, if somebody actually sits down for 3 or 4 hours, goes and reads, and because we document everything, right? It's like, you know, spend the time reading and you'll realize, you know, we oil trade for us isn't whether we're right or not. Never is. Never. We're always right. Hate to be that way, but take a look. But it's all decision. It's this decision, right? So right here, you got a decision. It's going to go down channel or up channel. How do I know that? Because we're right about it every time. Do I know whether it's going up channel or down channel? No. Do I know it's starting to confirm? Yes. How do I know that? It got through the channel. This channel here was there on the chart before price got there. So as soon as somebody can, you know, predict the targets, run the charts, the channels, all the support and resistance that we do in advance of trade, bring it to the table and show me that they can do that, there's really nothing to talk about. And that's why a lot of times when like people talk to me about oil and start telling me what they think is going to happen with oil, or start, you know, doing that thing where it's like normal trading, it's not normal trading for us. It's, you know, it's different, right? You talk to me about, you know, Apple, and that's going to be a totally different conversation than if you talk to me about oil. You know, I'm not going to talk to you about oil the same way. Oil's going to be like, this is what Epic says. Why? Because I've, you know, well, Epic's been public for 8 months, publishing every day for 8 months, and hasn't been wrong yet. And before that we were, you know, internally publishing for 3 months. So we're almost a year in, and we're literally into thousands of calls now. We're not into hundreds or tens of calls. And we're talking about charting that's in advance. So an hour, 2 hours, 4 hours, days, or weeks, or even months, some of the calls. So it's not a normal conversation. So you can't have a conversation like you would normally have with you know, a normal stock. Oh, it might do this, it might do that, and what about this indicator, and what about, no, the, why? Like for us, it's like, we don't even want to talk about it. We don't, why would I consider it? We're right. Right? I mean, so it's a different conversation. And people don't like that, and I don't really care. And the reason I don't care is I can sit and I can trade Epic all day long at between 1,200 and 3,000% a year. So then the question is, well, why don't you go dark and do it that way? Well, I could have easily. Endless, endless offers all the time. It never stops. That's not what I chose. But peeps that are using it have to respect it for what it is, because I won't have the conversation with them if they don't. And what it is you got to do your homework. So before you have a conversation with me about oil and the way it trades in a way that doesn't respect what it is, like you want to think through that, because we don't want anything to do with it. Just a waste of time. So you can see how it's confirming into what I told you would happen, right? So it was vicious before it got through the wall. I knew because of the velocity of trade that it was probably going to get through the wall. It got through the wall. And before it did, I told you that its test would be at the green fib mark there. And that's what's happening. So the tests for this new channel then are whether or not it stays up and over this orange diagonal line. That's the number one test. The second test is whether or not it gets above this fib line. If it gets up above this fib line and it comes back and it holds, its probability that it's going to hold in the new channel is very high. It's already high, but it's extremely high at that point. So it's passed one test, another one that's purple, that's a test, and now it's onto its third. And then I'll show you where it absolutely confirms. This yellow line here, so these yellow lines accompany major support and resistance in the algorithm. If it gets up over that yellow line and it confirms and it goes, your probability is about 99% that it's in its new channel. Where it becomes 100% is if it's got up over that yellow line, it's tested this lower channel wall support and bounces. Those two things happen. So in other words, so right now you can't absolutely confirm, but I can tell you at the rate of trade, the velocity of trade, just going through that resistance just now, it's very bullish, not just kind of bullish. If you're short oil right now, you're just not paying attention. So, and I'm talking on the, you know, short-term time frame because it's not confirmed, but it's extremely bullish. So down here is the outside wall. Up here is what I'm telling you is the second most important resistance you'll find on the charting, those yellow lines. So then what you do is you bring your runway down a little bit here so you can see a little more, get a little more visual. Now what you'll find with this trading view charting is that the times will change. So you got to kind of adjust it once in a while. Anyway, so above this yellow line and this bottom channel wall, right? So this whole area in here until it's above this yellow line, this whole area is, you know, really no man's land. It's unknown whether that channel is going to confirm. I'm talking 100%. The farther you get into the channel, the more probability that channel is going to confirm. But to get 100%, you need to up over that yellow line, and you need the bottom of the channel to be tested. Sorry, this charting is seriously throttled right now. Oh, I see why. It's not set to go past the time on Friday. Anyway, so if you can imagine, you follow this yellow line over to the bottom of that channel. Once price is up and it's tested the bottom of the channel up in here, that's 100% confirmed that you're in the new channel. But by the time you get there, you're already halfway through the channel move, because there's resistance coming, right? So your resistance, I mean your main resistance, the resistance, like not kind of resistance, but the absolute resistance is at the top. Not very far above here, I'll show you it. The firms that have this charting, to give you an idea of the reason why I get serious about it, and I'm like, I really don't want to put up with the BS that comes with people that think they know what they're talking about with oil. The firms that have this charting, just to get in the door, it's about $10,000 a user a month. It's between $10,000 and $100,000 a month. So if you go and do your research in the marketplace, you're going to find out the people that use this charting, that's what they're charging. So when they're charging the multi-user firms to use these charts, and they're sending the technicians to train and work with those firms, those dark pools, they're charging minimum $10,000 a user a month. So when people tell me what oil's going to do, or might do, or maybe we should do this or that, you gotta appreciate what's going on here. So anyway, this is the upper resistance at 50.98. That resistance right there is, well, you know, I just told you that the yellow was the second most significant. Really, the yellow one is the third most significant resistance. The gray one that you're seeing there is the second most significant. The third, well, the first most significant, sorry, is up above, and it's a cluster of resistance that we've known about and we knew about months before price got in there, and our members were told and warned very clearly, and we know exactly where it is. And while the TV and everybody else was talking about what oil was doing, anybody that actually does their homework and actually reads and spends 3 or 4 hours in Epic's reports realizes, holy shit, these people actually knew the whole time. They weren't fooled. So you see why I have no patience for it. Zero, none. So I'm just making it absolutely clear right now. That's where we stand with Epic and oil and oil's trade. So when you're discussing it with me, those are kind of the rules. You either go with the program, or I really don't want to hear the rest of it, because, you know, there's my rant for the day for you folks. So it's coming off that resistance I told you about. So now if you're trading oil, what you want to do is you want to think to yourself, I'm in a quadrant. So what you do is you can do one of two things. You take this and you go like this, and you go like this, and you say, okay, there's my trading range, that triangle. Why did I do that? Because that's the important area of the quadrant that you're in. Now you could say to yourself, well, actually really I'm in twice that, right? This is my other triangle here, the top part of that quadrant. The reason why I said I'm saying that triangle, now let's get rid of the last decision, which is this one. Oh well, let's leave it there. Charts, okay, we won't leave it there. The chart is seriously lagging. Is because there's such a heavy resistance and support here that if it gets up in here, well, it's in the next triangle. You know, if it gets up and confirms, right, and goes, it's in the next triangle. But the reality is it didn't. It's come off. It's confirmed above this one. It's trading in the way that the machines see it, is it's trading in here. So it, you know, until it's up and over. Now what the machines do is the machines do not take it through resistance. The humans have to take it through resistance. All the machines do is they take it from decision to decision more efficiently than humans can. So once it gets up over support or resistance here, if it does, then what the machines do is they wait for the humans to confirm that they want this to go higher. Then the machines simply take it to the next resistance, this wall, and stop and wait for the humans to go through it. So that's why when trade came up here to this wall here, and I said that was vicious, what I was talking about is the machines don't do that. The machines kick in after it confirms above. They confirm and take it to the next decision, and that's why you see it sitting there right now. So that's very critical. How do we know this? Because we built the bloody algorithm, and to build an algorithm model like this, you got to know how it's traded. How do we know how it's traded? That's a secret, but we know how it's traded. Test it, go back and back test it and see if we know what we're talking about. So when I'm telling you that, you see here's an algo support right here, this diagonal line, dotted line, it's one of the least significant of them, right? It's thin. Look at how precise, right when it back tested and it sat on that wall, boom. Though that's the machines. Humans can't do that. Humans can't trade that incredibly precise. The machines are the ones that take the boosters from the support and shoot it up. But once it gets to this resistance, the machines shut right down. They wait for the humans because they're high frequency trading, right? The bots. The humans get through and they trade in between. Then they wait for the humans to take it through and then up into the next one. But the way that traded, that's not how it traded. When the machines hit it down here, the humans took it right through and right above it. It just viciously went right through, but the machines won't do that. The machines will shut off though, and when the machines shut off, the stops can get hit, right? And that's why you get the vicious downs in oil. So when it got up into resistance here, the machines literally just shut right down and it just tanked because it just took the stops out. So right now what you're seeing, so over top of this resistance, that resistance right there, if it confirms, you'll see the machines take it, and they'll take it very very consistently up to the next point of decision, which is this wall, or that yellow line right there. What they're shooting for, what the machines are targeting, is the apex. So the machines will always take trade if the humans allow the trade to go there to that apex right there. So your immediate intraday trade target is right in that apex. Not saying it'll get there, but it probably will. So how did we know oil was going to fall off right here? We knew oil was going to fall off right there because we were getting into an apex. Well, the side of an apex. It's not really technically an apex, but and that's called the time price cycle completion. So those are just a few things I know about how the algorithm works, and if you use those principles, you'll never lose an oil trade. You won't hit just some of them. You will win every single oil trade. Okay, let's take a look at what else is going on out here. So the S&P is coming off just a little bit. Volatility is under its Bollinger Band, so that would have worked nice as a short. I probably should have done that. Shoot. You never know, that might screw around for a while. Might be unpredictable. XIV's doing okay. And then let's take a look real quick at our momos, and then I'll take a break here. GLYC. This is a 1 week chart, sorry. Oh, darn it. Trading View. Talk about piss a guy off. Um, just hasn't stopped, hey? Fantastic play. I was getting DMs about it while I was on about oil there. And I should have paid attention. Sorry to the peeps that were DMing me there. Thanks for letting me know though. That whole conversation about oil, like every time we start with a new multi-user group, like if you go to our website, go to see the commercial guys, the multi-users, they've taken it on way faster than retail, right? Because they know the value. Retail, it takes some people some time, but you know the expert traders in the dark pools and stuff, they know the value, right? So it's just a matter of whether or not they can get it cheaper from us and more efficiently, whether they like us more and they like our training more and all that kind of stuff. So I have to go through the same training thing with a lot of people, but once it's respected for what it is, then you can actually use it for what it is. But to struggle back and forth about what it is or what it isn't and how oil trades and how it works is a waste of time, because you just get into all kinds of crap. So we literally, fire clients. we're literally like, no, it's not worth the time, because you're just gonna, you're just gonna cause us significant aggravation. GLYC. Well, it's getting a little late in the morning. I shouldn't have ignored those DMs. Shoot. Appreciate them though. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So yeah, I missed it by. Yeah, that's where the DMs were, right in here. 10 minutes ago. So what did I miss? I missed 873 to. Well, that's not a bad trade. 873 to 940. Darn it. That's GLYC, and then we have. I'm not getting DMs about any other ones. It's a big test for S&P coming up here right away. Huh, my scanners didn't even pick this one up. That's some good Momo, boy. Huh. Galt is back, ETRM, CCCR. There's Groundhog Day happening there. Okay, well, I'll get set up for the afternoon. XIV's coming off. We'll see if she holds. Might not hold. USOIL. Is it holding it? No. So it's struggling. So your highest probability scenario now is that it's going to sit in this triangle and it's going to target this target. But keep in mind, Friday targets are not that powerful. So it's now 10:53. I'll catch you guys at noon.